Okay, let's see if we are live. Not really sure, so we're going to kind of hold off a minute or two. If you are just coming in, you have reached the home of the Construction CPA's Coffee Cafe. And if you're here, let's try some hashtag coffee break for the morning. How about that? Let's get us going. Let's maybe get a little coffee going. Definitely needed this morning. All right, let's see. Technology is great when it decides that it's going to work. So, all right, we're going to give it just 1 second. And all right, I think we are live. So good morning. Hello, everyone. Welcome to this morning's edition of the Construction CPA's Coffee Cafe. I am Lisa Raish. I am the Construction CPA. We are Bodie Business Advisors, aka the Construction CPA. So we're dropping the hammer on cash flow problems for contractors with hands-off accounting so you can do things that matter. Today's exciting topic is, actually, I don't even have the correct topic up today. See, I am. Oh, yeah. Okay. So we are just definitely having technical difficulties this morning. And oh, yeah. We have one of those days. Today's one of those days. Do you get out of bed or not to get out of bed or not to get out of bed? That is the question. So we were going to talk about the difference between contractors and employees. And of course, I know enough to be dangerous. And it doesn't look like my notes are here today. So am I going to be winging it? Oh, no, here we go. All right. See, that's what happens, So I wanted to make sure I had notes. So I wanted to make sure I cover as much as possible. Okay. Yeah. Technology. Okay. Maybe we should try this again. So you have joined the Construction CPA's Coffee Cafe. And today's topic is the difference between employees and independent contractors. So this is something that we run across a lot in construction. A lot of our clients want to bring everybody on as a contractor, and that's not necessarily always the best option or the correct option. So I just want to kind of walk through what the differences are. There are going to be slight differences between what the Internal Revenue says are employees, maybe what the Department of Labor says is an employee versus a contractor. And then also what we're running into in the last couple of years is actually the states are also chiming in and giving their take on the difference between an employee and a contractor. For instance, in California, I'm sure everybody's seen the news, Uber, they want, Uber not to be independent contractors to drivers, but to actually be employees. So again, we're going to kind of walk through some of the high points of, the difference between employees and contractors. So what's an employee? Employee is going to be someone who works directly under you as the employer or under the control of the employer. And the word that's kind of thrown around a lot is control. So the Internal Revenue Service has this thing it calls the control test in determining what the differences are between the two types, whether you be an employee or a contractor. An employee is going to receive regular wages from you. So if you pay every week, they get a check every week. If you pay every other week, they get a check every other week. You as the employer are withholding payroll taxes. So if they have federal taxes, if they have state and some of the states where there is an income tax, so there'll be state withholding. And then there's also something called FICA or Social Security withholding. That is a term kind of used interchangeably by a lot of people. We'll talk a little bit more about FICA or Social Security a little bit when we talk about the contractor, but that tends to be the really big dollar amount that you're withholding from someone's paycheck. But again, it's being withheld every pay period. If you have an employee, they typically are going to have set hours, Monday through Friday, if it's a desk job. If you're in construction, sometimes maybe it's 7 or 7:30 in the morning till 4 o'clock in the afternoon, right? Something like that. You're telling them kind of when they're getting there, like when you need to be there, when you're leaving. And then in some, depending on, again, the state that the jurisdiction you're in, the state, they are also eligible for things like minimum wage. So to whatever the minimum wage might be in your state, or they might be eligible for overtime if they're doing more than 40 hours. So there are some constructs around having an employee. Your independent contractor, on the other side, is going to work independently of you, and they control what work they do, how they do it, and when they do it. So again, it's that word control. Who's in control of the day-to-day actions that this individual is doing for you? In most cases, this individual is going to get paid per project or per contract. They're going to pay their own taxes. You are not withholding any taxes from the payment that you're giving them. Again, construction, we do a lot of work with contractors. If you are an independent contractor, you're most likely coming to the site with your own tools, your own truck, those kinds of things. Those things aren't, they're not given to you. They're going to set their own work hours. So again, if you're a plumbing contractor, an electrical contractor, an HVAC contractor, typically, I'll be there on Tuesday to do whatever work. You're going to tell the homeowner, the GC, whatever. Again, you're making your own hours, for lack of a better word, and can afford more flexibilities in terms of coming and going as you please. Again, if you're truly working as an independent contractor, you, like anybody else, need to work. So you're going to want to make sure you show up and actually do get paid, or actually complete the projects that you're supposed to. So there's definitely differences between the two. So you're going to have a level of tax compliance. So if you are properly classifying people between contractors and employees, you're going to have an obligation, either at the least on a monthly or quarterly basis, to remit those withholding taxes. There are timing regulations around when an employer remits payroll taxes, depending on how much money, is withheld and so on. So there's a frequency and there's a schedule, and you have to maintain and keep with that schedule. And if you don't, then the service or any of your state or your local taxing authorities are in fact going to charge you penalties and interest for not paying on a timely basis. So there's going to be obligations from a tax perspective. There are going to be legal compliance, which I'm not going to comment here. I'm definitely not an HR individual. I know enough HR to be dangerous. What I will say is that there are going to be regulations around how you have employees in the various states and jurisdictions that you're in. Some cases, there are going to be benefits. So if you are an employee, there are going to be things like benefits. There may be healthcare. There may be a retirement. There may be other kind of de minimis miscellaneous types of benefits available to you. But if you're a contractor, you don't have those, right? And that's really going to be one of the really big difference. You could potentially, if you aren't careful with your classifications between employees as well as contractors, you do take the chance that you could be audited. So you could be audited either by your local jurisdiction, your state, or even on the federal level by the Internal Revenue Service. And if they come in and any of these entities make the determination that this individual or multiple individuals are in fact employees, now they can recategorize them, and now you're on the hook for back payroll taxes, penalties, and interest, and it can get very, very expensive. So you want to make sure you properly classify between a contractor and an employee. And from just a general business perspective, and I don't want to use the word control as you control somebody, but when someone is your employee, you have a little bit more control around how they represent you. And so just from a branding and a business perspective, typically, you're going to have control around how an employee represents your entity versus an independent contractor just going to come in, do the work, isn't probably, isn't going to necessarily have any contact with your customer and so on. So again, there's just a slight difference between the two types of individuals. So the Internal Revenue has this thing it calls a control test, and I'm going to kind of walk through it quickly. I don't want to like kill everybody with minutia. But basically it's the control test, right? Behavioral control. So, are you directing how and when and where the work is done? You come to my office building. My office building is at 123 Main Street. You're there 9 a.m. to 5 p.m. Like that's an employee. You have control over that behavior. Again, your independent contractor is going to work autonomously. Financial control, right? We are, CPA practice. You come to my building, I give you a desk, I put a computer on that desk, it has all the software on that desk, right? I have kind of that financial control of those tools that we're using in the business. So again, if you're a contractor, if you're giving somebody a truck and you're telling them that on Tuesday morning at 8 a.m., you need to be at this particular location to do this particular work, you've got, a behavioral as well as financial control over that. You're giving them that truck. The truck has your branding on it, right? That's an employee. On the other side of it, it's, when you look at, for instance, when, you have someone building a brand new house or building a commercial building, right? That person who comes in to do the HVAC is most likely going to be an independent contractor. That person comes in and says, yes, I know you're, here in your schedule of building your building, but, I'll be here next Wednesday. We'll be here for 3 days. We'll do, whatever we've been contracted to do, the HVAC, the electrical, plumbing, whatever it is, right? So they're bearing the expense. Like they have their own truck. They have their own equipment. They have their own tools. They're bearing the expense of actually their own business, right? It's not you as the owner giving them those tools to use on the job. And, the last kind of, it's just like a general relationship. You're going to have a relationship with this individual. It's going to be an ongoing relationship. Again, it's going to be permanent, right? If you are hired by anyone, the expectation is you're hired naturally, indefinitely, not for the next week or 2 weeks. Whereas with an independent contractor, it might actually be, you're here for the next week or the next 2 weeks until your actual project, the one that you have been retained to do, is actually completed. So the Department of Labor has some comparable rules. They call it a control test as well. They're pretty comparable to, there's going to be some small nuances. So again, if you are really questioning the difference and you have some, little minutia, little nuances to your particular business, again, you might want to seek, legal help from an attorney to kind of understand and make sure from Department of Labor or an HR perspective that you're protecting yourselves. So what are some of the kind of implications from a tax perspective? So again, payroll taxes. You as the employer, if you have employees, are paying payroll taxes. So number one, you're obligated to withhold. So you're going to withhold any federal, state, FICA withholding from the employee's payroll. But on the other side of it, as the employer, you have an obligation to match the Social Security or the FICA. So an employee has 7.65 withheld from their payroll. You're required to match that 7.65%. So again, you have an obligation to withhold and remit timely, as well as match and pay the payroll taxes. You're going to pay payroll taxes to your states. You're going to pay typically into their state unemployment funds. So that's that pool that when someone is laid off or is fired or whatever goes and files for unemployment, that's the pool that they're kind of pulling out of. So again, you're obligated to pay these payroll taxes. There are going to be different rates and each of the states has their rates, their rules. States typically will, like anything else, depending on the type of how often you lay people off, the rates change. If you tend to keep your people for long periods of time, the rates might be lower. We see in construction where the rates tend to get a little bit higher because of what they're doing, and they're constantly, in some cases, either laying people off and so on. So the rates can get high. It can get a little bit expensive. You've got your fringe benefits as an employee. Again, are you paying healthcare? Do you have a health, are you paying, you have a retirement, right? Are you matching on a 401k, something like that? Again, there are tax, there are, you as the employer, right, the match on your 401k is a deduction for your business. On the opposite side of it, the deduction from the employee's payroll for that 401k may be tax deductible to them. So there might be a tax benefit for them if they choose to go that route. You also have the opportunity in some cases to go the Roth route. We're not going to go into that. But again, there's an opportunity for your employee to actually bring down their taxable income as well. So again, different options there from a tax perspective. Again, you've got healthcare. Those are the big kind of bennies or fringe bennies that you tend to see. Healthcare can get very, very expensive. The expense to the business, again, is deductible from a tax perspective. In some cases, the employee, you'll probably have them match, or you'll have them contribute something to the healthcare, the cost of the healthcare. In that case, if you have a Section 125 plan and they have the ability to, again, further reduce, your employee has to further reduce their taxable income, with that, the healthcare. So again, your employee gets a benefit and then you get a benefit as well. Again, there's going to be tax and compliance for employees, right? So you're going to need to make those tax deposits on a regular basis. There's a schedule that you need to make them. You need to file your payroll taxes on a quarterly basis. You need to remit those W-2s and W-3s at the end of the year. Your employee needs to get them by January 31, right? There are all things associated compliance-wise with having an employee. So again, you have to keep accurate records. You're required, I'm not sure, I believe it might be 7 years when it comes to the W-2s and retaining those. I apologize, I don't remember the exact on that, but you have an obligation now on an annual basis to retain those W-2s as a business owner in your records. Again, all related to the compliance. It's not just, hiring somebody and getting them on the job on Monday morning. It's all of those things involved. So if you're an independent contractor, what does that mean for you from a tax perspective, right? So you're not getting any taxes withheld from your salary, from the payment that you're receiving, right? You're on the hook for your own taxes. So you're paying something called self-employment tax. So with self-employment tax is basically the FICA that the self-employed or the independent contractor owes. And we talked about it before. As an employee, you have 7.65 withheld from your salary and your employer matches that. Well, when you're self-employed, they want that entire 15.3% from you. So you need to pay that self-employment tax on top of your income tax on the income that you've earned. So again, it's your responsibility to pay your own taxes. We recommend any of our independent contractors to make their estimates, make them on a quarterly basis so that they can at least, not make that balance due at year end so expensive. We have clients who have varying ideas on whether or not they want to make estimates or hold on to their money and do other things with it. Again, you're going to be on the hook for all of that. So when you work for someone else and you have that little bit of withholding every pay period, right? That goes into the pool for you. So when you file your tax return at year end, either, you don't owe or you have a small balance due. When you're an independent contractor, you are entirely responsible for withholding all of that monies yourself and remitting it. So again, the responsibility moves from the employer to you as the independent contractor. At year end, if you are an independent contractor, the people that you've worked for are going to send you a 1099 for the work that you've done. So there would be an expectation within the early part of the next year, in that January timeframe, you'd be getting your 1099s from your from the people that you did work, projects, et cetera, for. There are no given fringe benefits when you're an independent contractor. So again, if you needed healthcare, you would need to go out to, any of the local health connectors in your state to potentially get healthcare, but you'd be responsible for it on your own. If you wanted to make contributions to retirement, again, you would be on the hook to do that yourself. Now, again, as an independent contractor, you have the ability in some cases to potentially deduct some of these things depending on what you have in place and how it's structured. So, but again, you're responsible for making those payments, for choosing the healthcare that you want. There isn't someone who's coming to say, this is our healthcare. This is what it is every pay period. Here's your Blue Cross and Blue Shield card, right? You as the independent contractor have to choose those things. So there are costs associated with each one. There can be significant costs associated with hiring an employee, right? So for instance, if you are a contractor, if you hire an employee and you need to get them a truck and fully outfit a truck with all the appropriate tools, and they need your branded gear so that when they go out to customers, they have your branded t-shirts and so on and so forth. And are you training them and getting them not only trained in the way that you do things in your business, but maybe they're getting other trainings. Those are all costs associated with you getting that person up and running. So in most cases, if you hire somebody on Monday, they're not necessarily going to be able to get on the ground and running. You're going to have to potentially train them, maybe have some ramp time. So again, there's costs associated with them not being, fully ramped and ready to go, or there's costs associated with you taking time away from what you're doing to train them up. Again, costs associated with having employees. There are again, control, right? So some people want to have the control over what the individual is doing, down to, how they do this, how they do that. Maybe, you don't, and maybe it makes more sense to do the independent contractor. Again, how much control and flexibility is there in the individual coming and going, doing the project or the work whenever, right? That's going to speak to possibly whether you want to do an independent contractor or an employee. And then there's also, again, going to be the legal and the compliance related work, right? So if you have employees, you are filing quarterly payroll taxes, you are filing periodic payroll deposits, depending on what schedule you're on. You have compliance at year end for W-2s. Now, if you have contractors, your compliance is probably just going to be the 1099. But one of the things that we run into a lot in construction is where the companies hire people, they say they're contractors, they say they're 1099s, but many of these individuals don't have their own workers' comp insurance. And so when it comes to construction, if this individual who's on a job site working on your behalf does not have their own workers' comp, then they are going to base their costs are going to be lumped into your workers' comp costs. So, it may seem like it's a benefit to not have them as an employee, but that person that you're saying is a contractor should have their own workers' comp, because if they don't, you're going to pay for their workers' comp in your policy. So there are a lot of little nuances, legal, tax, business related to what makes sense and what doesn't make sense. Again, if it's going to be short term, maybe it is just a contractor relationship. If this is someone who you think you're going to have on for a while and you're controlling where they go every day and when they go there, they're an employee. So these are just different things that you want to think about. You do want to make sure that you are very clear on what the relationship is. You don't want to be kludgy and cloudy in that, because there are ways that if an individual feels that they've been classified as an independent contractor and feel they are in fact an employee, they can go back and report that. And again, now you have potentially either the IRS or the state tax authorities kind of coming in and looking at what you're doing. And then again, potentially on the hook for additional penalties, interest, any taxes, things like that. So, that's generally the control test. You want to go back to the control test. How much are you controlling what they're doing on a daily basis? And on a really high level, that's where you start with determining the difference between independent contractor and employee. Now, which one is financially better for your business? That's ultimately going to be your decision. But you really want to think through what kind of the pluses and the minuses of both sides and the type of work that you're doing to determine what type of individual that you need. And keep in mind, the state, your states, your federal, and the Department of Labor, they all kind of have little different nuances to the rules. So you do want to make sure that you are clear with the different rules that are that you could potentially be on the hook for in determining whether you have an employee or an independent contractor. So if you loved today's cafe, please remember to comment down below. Let's comment with some hashtag cash flow, right? Let's get everybody cash flow positive. And remember, we're dropping the hammer on cash flow problems so you can build things that matter. We will see you next week and have a wonderful weekend.